tonight I just want to do a quick episode just to talk about the upcoming stock market crash. And yes, there is in fact a stock market crash coming. I do not have a crystal ball, so I cannot see into the future any more than you guys can. However, the writing is certainly on the wall, and what I'm going to do in this episode is show you the writing on the wall just in case you haven't been looking at it, so that you can prepare yourself for what is coming next, as I am. So I am already in the mode of looking ahead and preparing for the next crash. For me, crashes are opportunities, lots of discounts. You have a lot of undervalued instruments that you can pick up. People who are not prepared will be in panic mode, and they'll be selling and selling and selling, which is going to drive the prices down lower and lower and lower. Now, you don't know how long the crash is going to last, so the idea of picking something up when everyone's selling it is scary if you're a short-term investor, which I generally am not. However, as they say, cash is king, and if you have a lot of cash, as I tend to do when I'm preparing for a downturn, I tend to accumulate a good amount of cash so that I can better weather negative conditions. You want to sort of liquidate a lot of your assets so that you are protected from some of the changes. So for example, if you have a huge equities portfolio and you don't do any liquidating, then you're looking at seeing a lot of your portfolio's value declining significantly. Right? And if you wanted to be able to access the value of your portfolio, well, that's obviously going to be problematic if you've lost a lot of that value. So the idea is to move it into something that is protected. Some people talk about buying gold, and that is certainly a strategy, although you have to be aware of who you're listening to and who's telling you about buying gold. And you have some people that are out there talking about, seems like they're always talking about a crash is coming, but a crash is always coming. You know what I mean? So it's kind of silly to say that a crash is coming all the time, right? Because what do they say? A broken clock is going to be right at least twice a day, right? All right, so let's look at the writing on the wall that I'm referring to. So let's look at some data. So here we have the Dow Jones Industrial Average, and we're looking way back in time, 1979. Who was alive in 1979? Who listening in right now was alive in 1979? Did they even have color TV back then? Comment in the chat and let me know if you were alive in 1979. So we're looking at 1979 all the way up to present day. Now, I did a video not too long ago talking about looking at patterns in these graphs over time and sort of doing a technical analysis. So if we did the same thing, but not looking at a particular instrument or security, rather looking at the market conditions as a whole, what kinds of patterns do we see? Right? Now, there's a lot of stuff going on here, of course. You have areas of increased volatility and decreased volatility. Just looking at this roughly, I can see a lot of things going on from 1997 to 2003. and then we go previously 1997 and beyond, we see things are not quite as crazy, right? You see how smooth the graph looks? 1979, 1980s, little hump right there. Generally, we're seeing the same level of volatility, right? The rises and falls of this graph here. And then somewhere around 1996, we see a lot more volatility, right? Spiking up and spiking down and spiking up and spiking down. It's almost like this was sort of a little bit of some, think of like the infancy, right? And now getting to the terrible twos, right? Terrible twos, starting to knock things over, getting a little crazy, getting a little loud, getting to be a little bit of a handful, right? But the pattern that I wanted to focus on for this particular video is how you see the rises here, and then it falls, and then it rises, and then it falls, right? And then you see this, looking from a broad, perspective, we see a general pattern of just rising and rising and rising. Sure, there's some dips in here, but when you're looking from, this point of view where you're looking at decades and decades, the general pattern is a rise from 2008, right? After we got out of that housing situation, consistently going up. And then we see some stability in 2015, and then we see going up again, and then we see a significant drop right there. It's not the best graph. Early 2018, dropping to summer of 2018, and then rising up again, and then falling again. So here's the basic thing. We see the general pattern: rising, falling, rising, falling, rising, rising, dip a little bit, rising, rising, dip a little bit, rising, rising, dip a little bit. What do you think is coming next? Just look at this graph where we're at right now. What do you guys think is coming next? Just considering the pattern that we've seen over time. Let me see if we can get a 5-year view. So if we look a little bit, zoom in a little bit closer, we can see general trend, upwards, 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 peak and drop and peak and drop, right? What do you think is going to happen? Is it going to continue going up even further, or is it going to start heading back down? Right? Let's look at some other graphs. Here's a Dow Jones historical price graph, 1917 to 2017. So in this graph, we see worst crashes in history. 1930, right? And we see this situation here, which is, look at how long this lasted. You see that? And more importantly, look how long, from a long-term perspective, look how long things were rising. Now, surely you had some dips in there. Those dips could be 5-year, 10-year dips, right? But they are there. But the general pattern, right? If you were to draw a trend line, the general pattern is a rising for quite a bit of time. Now, this graph is not the best to get the years. Let's see. This is 1940. That's 1950. 1940, 1950. So this is going to be like 1945. Somewhere in here. So 45, 46, 47, 48, maybe 48, 49, 1949. So 1949 to 1965. So that is quite a bit of time. We're looking at, by my horrible math, almost 20 years of just gains, things getting better and better and better, right? And then look what happens. It goes one of the worst crashes in history, and look how long that took. Look at the period of time from 1965 to 1980. 65, 75. Right? That's almost 20 years of things just going down and down and down. Almost 20 years of things going down for a period of time, right? Now we see the market generally going up from 1980 to just before the 2000s, just rising and rising and rising. Look at that. Awesome. Right? And then we take a big hit. This would be right around the time of the dot-com crisis. So the market dips down to right around 2001, 9/11, dot-com crisis. So we got hit with two big events. Then it recovers, rises back up, right? And then falls dramatically 2008, 2007, 2008. That will be about the time of the housing situation. And then look at what's been happening since then. Rising, 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 rising. What do you think comes next? Who can guess what comes next? Look at history, right? Those who forget the history are bound to repeat it, right? So if you look at what's been happening in the history, then you can easily predict what's coming next, right? Can't predict the future, but this, I call it a game, this is not the first round, right? It's not even the second or the third round, right? This game has been running for quite some time. So you have a lot of data to look at, right? And from the data, we can see that things are very cyclical, right? Things rise and they fall. They rise and they fall again. The latest trend we see since 2008, right? This year made it 10 years. 10 years of a general trend line of things going up. 10 years. What do you think comes next? Right? These are questions that you need to be asking yourself when you're thinking about your financial planning, right? A lot of people get too sort of tunnel vision, right? Things are good now, the economy's good now, so they're going and they're spending and spending and spending. And by doing that, you're helping other people with their financial plans, right? You are setting them up to be in a great position for the next economic crisis. And what that means is, while you are running and screaming, job market falls apart and, things are just really, really bad. While you're running around and screaming and desperate for cash, so you sell, right? Look at the price of the house. Your house is going down, right? We got to get out of this. We're losing all of this equity that we have in this house. We got to sell it before the price just goes any lower than it already is, right? So you're selling your house at a discount. Who do you think is buying that house? Who's going to buy your house when the price starts falling and you bail I'm going to get rid of the house and rent, right? So you can protect yourself from the decreasing value. The people that are going to buy your house potentially are going to be the ones that you help set up during the up times, right? Times are good, the economy's good, your money is good, and you're spending. All that cash that you're giving away is going to other people who's taken all that cash, right? And they are locking it away in one way or another, preparing themselves to clean up when everyone starts running and screaming, right? That's the big dog move, right? When everyone is running and screaming, so while things are good, at some point in time, you start to accumulate cash. Cash is king. Accumulate cash and also assets that are, shall we say, advantageous for the down times. Now, there's a lot of factors. It's not a black and white thing, but potentially people that are investing in commercial real estate could actually be in one of those positions where they're set up to be protected, right? Now, if you've bought a house for you to live in, you are at risk, right? If we go into another downturn, well, not if, when we go into the next downturn and things are tough and therefore just not a lot of buyers, right? If people are struggling, they're not getting raises, the job market's bad, a lot of people out of work for a long period of time, taking a long time to find jobs, money is tight, who's going to buy your house, right? If there's less people on the market for a house, your house has a lower value, right? Now, if you're not planning to go anywhere, then maybe you don't care, right? And it's not just that. If you're not planning to move, and well, not just if you're not planning to move, if you're not planning, if you're not going to move or try to move out of your house before the time that it's going to take for the economy to go down and recover, then perhaps to you it doesn't really matter, right? But we don't know how long it's going to take. Like, look at this graph. I think we were looking at somewhere around, what was it, 1965 to 1980, right? That's a long time. So obviously, if it's 1965, you have no idea that the economy is going to continue going down up until 1980, right? You have no idea. And that's part of the issue. If you don't know how long it's going to go down, and you're not even necessarily sure how long you want to keep your current property, that could be an issue. Because what if the time that you want to move occurs before the economic recovery, right? So let's say 8 years from now, you decide that you want to move, you want to sell your house, right? But turns out, well, you wouldn't know this at the time, of course. Turns out there's another 8 years before recovery comes around. So you are now ready to move, but your house has lost tremendous value. So selling it now would be a huge loss to you. However, it's going to be another 8 years plus before the market recovers. So now, do you get stuck in a house for 16 years when you want it to be out in half the time? So that's a scenario that could affect a homeowner. But in terms of the commercial real estate person, if you have commercial real estate where you have renters, right? Think about that scenario. So it's a form of like fixed income, right? And I don't know that they consider that officially to be fixed income. Fixed income is normally talking about like bonds, right? Where you have an instrument that has a fixed income, right? So you're getting some kind of a interest rate or something. But renting is kind of a similar scenario, right? You have a tenant that's paying a fixed amount of money every month, right? That amount doesn't really fluctuate that much, right? In fact, consider that during a lot of these downtimes when the economy was not doing well, for those of you that are renting, did your rent go down? Did your rent go down when the economy was not doing so well? Hey, CKKO, what's going on, man? Good evening to you. Did your rent go down when the economy wasn't doing that well? I don't think so, right? In fact, many of you probably experienced rental increases. So let me get this straight. So the price of houses are going down. The job market's falling apart. So there's more people than jobs, right? More workers than there are jobs, right? And everyone's complaining and suffering and difficult times, right? But your rent doesn't go down. In fact, it continues to rise. So think about that from the perspective of a landlord, right? You've got a multifamily home, or you own an apartment building, and you've got these rents coming in. Now consider another factor. Just like how I mentioned before, that you might want to sell your house, right? Because you're seeing the value going down. You don't want to be trapped into this now depreciating asset, right? At a time where you want to move, but now moving is a $100,000 or $200,000 proposition, right? In terms of the losses you're going to take if you move at that time. So if you want to avoid that, some people, just like how people jump out of the stock market, like, oh, my portfolio is not doing too well, so I want to sell all my stocks. I want to get out of the stock market. It's bad times. People with property might feel the same way. I want to get out of this before the value really goes down, and then I'm stuck here. 5 years from now, I want to move, and it's going to cost me a lot of money to move based on the lost equity, right? But someone who has commercial real estate is not going to have a similar situation. So that's another way where, and additionally, to my point, if people start trying to get rid of their houses to get into rent, right? Because as a homeowner, the value of your property is going down during a bad time, right? But rents are staying the same, in fact, going up annually, right? So the proposition of, but there's a limit in terms of, depending on your situation, but there's a limit in terms of how much they can increase the rent every year. So if the proposition is, you have a house that's losing tens of thousands of dollars in value month after month, right? Versus you being a renter and only seeing an increase in your rent once a year, and it's a small percentage, right? Look at that equation. Losing tens of thousands of dollars in equity in your house versus taking a small increase every year. So a lot of people are going to be attracted to the idea of renting. So a lot of people try to offload their houses and go into rent. Wait a minute. But you own commercial real estate. You own an apartment building. More tenants. And remember, once again, the rents aren't going down. The rents increase every year, even during downtimes. And that's your income. So once again, people that are in the good times, they're spending and buying all this kind of stuff, and good job, salaries are up, Everything's looking great. Look at the stock market. My portfolio is doing well. Buying, 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 buying. Right? Meanwhile, what the big dogs are doing is doing things like investing in commercial real estate. Right? They may have a business that you guys are basically customers of, right? So you're spending, putting the money in the pockets of people who will take that money and do things like invest in commercial real estate. So then when the economy falls apart and you're running around and screaming and, oh man, what's going on? This is horrible. They've got commercial real estate. They've got this rent coming in, right? And perhaps you might become one of their tenants, right? Because you didn't think long term while things were good. You were just, enjoying all the good times roll, right? So now you've moved into their property and now you're their tenant, right? But remember, these are bad times. So you go into their place, right? You take a pay cut. Then you lose your job. You end up in a financial strain situation. Now you can't pay the rent. You think that landlord cares about you? No. There's tons of people waiting to take your spot. It's almost like a musical chairs type of situation, right? And you don't want to be caught when the music stops. You don't want to be caught still standing. Right? So you've got to get yourself a seat before that music stops. The guy with the commercial real estate has his seat, right? And there you are trying to sit on that person's lap and they're not having it. You can't pay their rent, they will kick you out, right? Because there's tons of other people who had to sell their homes, they need some place to stay, and they'll pay the rent. Right? So they've set themselves up in a position where not only are they protected and shielded by the economic downturn, but they also can profit from it. And additionally, you have people like myself who during the downturn, I will, my eyes will open up, I'll be smiling as I look at the stock market just tumbling and I see, man, look at those discounts, right? So I can swoop in and I can buy 50% off, right? It's like a Cyber Monday that lasts for years. The ultimate Black Friday. An entire stock market that is undervalued. Once again, no short-term gains. So for the short-term guy, this strategy is for that person as well, but for the short-term guy, not so exciting. For the long-term individuals like myself, we can afford to take that risk, right? I can afford to go ahead and pick up these securities at a lower cost, right? And hold them until the economy recovers and the stock market recovers, and then take all those profits, right? So you guys sell your stocks, right? Because times are tough and you weren't prepared. And then people like me will take those shares off your hands for you and then profit when the economy recovers. Once again, look at the graph we have here. Imagine if right at this point, 1965, right? Economy starts tumbling, have a lot of cash. Cash is king. 291, what's going on? So 1965, you watch the stock market tumbling and you start smiling and watching everybody running and screaming, and you just wait patiently. And at some point in time, you got to time it, right? Because let's say you decide, like right here, it looks like it's coming back, so you go and you buy right here, and it does recover a little bit, but then it starts going down again. But if you're a long-term person, and that's a really long term, because if you were to do that in 1970, you don't recover until, what is it, 1985. 1985, things start recovering, right? But as a long-term investor, really long-term investor, that may work for you. And there's a lot of different things that you can do. And it's not just stocks. That's the thing everyone talks about. But the bottom line is, if you look at where things are headed now, you know what's coming next. So to answer your question, 291 says, why is it going to crash? Will it come back up? I don't know why it's going to crash. I can't see into the future. All I do know is that's the way the market works. And it's not just a market, that's the way life works. No one's life is always just positive, going, great. Things are great, everything's wonderful. You have health issues, relationship issues, financial issues, your roof is leaking issues, you were in a car accident, you lost your job. Things happen, right? That's the way life is. Life is cyclical. Right? You have good times, you have bad times. So whenever there's good times, unfortunately, what that means is that eventually bad times are going to come. And the longer you have good times, the closer you're getting to some bad times. So why is the stock market going to crash? Because it always does. Right? And more specifically, why I'm talking about this now is because not only does it always crash, but the timing is just about right. If you look at the cycles, rising and falling, rising and falling, rising and falling, rising and falling, rising, I think you know what comes next, right? Just look at the track record of the market. I mean, again, no one can tell the future, right? So ultimately, whenever you're sort of planning and predicting with the stock market, you're doing an analysis, you're doing speculation, but unlike something like people want to say it's like gambling or whatever, unlike those things, gambling, for example, or the lottery or something like that, you have actual data to look at and to do some analysis, right? You have some data to work with. You have historical data, so you can see the patterns. You can see the way the economy has behaved in the past, right? So you can see the trends and see the way it works. So you understand the flows, the ups and downs, right? And know that the economy, pretty much, it's always been this way. And unless we have a major change in the way we structure our economy and the way we structure our markets, unless there's a major change or departure from the way things have been, then the results are going to continue to follow these patterns, right? And the patterns are, it goes up and then it goes down. We've been on an uptrend for far too long. So when is it going to crash? I can't say, once again, but in terms of my financial planning, my initial target is potentially I'm still formulating my official plan, but my initial timeline that I'm looking at right now is I'm looking at something happening within the next 3 years. It could take longer, but that's the timeline that I'm going to be sort of hyper focused on and planning for. So once again, here's the S&P 500 versus long interest rates. Once again, rise, fall, rise, fall, rise, fall, rise, fall, rise, fall, rise. You know what comes next, right? Here is the Dow Jones Industrial Average. All right, so here we have, this is from 2000, rise, fall, rise, fall, rise, fall, rise, 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 dip, rise, 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 rise. Look how long it's been on this trend, right? Look at 2008. That's the last time we had a major downturn. All this time without a major downturn. Remember, just statistically speaking, the longer we stay on this trend, remember, the market, just oversimplified, has two sides. Again, this is an oversimplification. You got the bear market, you got the bull market, right? Trending upwards, trending downwards. Those are the two sides of the market. It's either going to be one way or the other. Now, if you look at it too much with a magnifying glass, you see all the little volatility and all these little ridges up and down, up and down, up and down, like all this little stuff. But on a broad sense, looking at it, from a wider perspective, the general thing is either it's trending upwards or it's trending downward. And these trends last for a pretty long time, 10 years, 20 years, right? 10 to 20 years of trending in one direction or the other, right? We have that right now, a trending for a long period of time from a long-term perspective in one direction, upwards, right? It can't keep doing this, right? The market is either trending upwards or trending downwards, right? The longer you're trending downwards, the closer you are to recovery. The longer you're trending upwards, the closer you are to a crash. Why is it going to crash? Will it come back? Will it come back? It always comes back up. But unfortunately, I would like to say that it always will come back up. But unfortunately, the reality is that's another unknown, another factor to consider. I would love to not be thinking, about some real Armageddon type stuff, conspiracy stuff, but the reality is, so yeah, the market's been doing this up and down thing, but more specifically, the economy, when you look at the way it's behaved over a time and you start to do an analysis and get to an understanding of why it behaves the way it does, then you start to realize and focus on some problems with the way our economy is structured, right? The way that we value the dollar, the way that we create money from nothing, right? We just magically create money out of thin air on computers. We have this reserve system where, again, extreme oversimplification, but you go and you deposit $1, right? And then let's say the bank loans out 3 or 4, right? Wait a minute. If you only deposited $1, how can the bank loan $3 or $4? Where'd those extra dollars come from? If you want to know the answer to that question, have everyone in America pay off all their loans. Everyone in America pay off all your loans right now, and you will find the answer to that question about where that magic money came from. Right? The reality is that money doesn't exist. It's not real. The reserve system is kind of a little bit of a smoke and mirrors. Back in the day, money was backed by a physical thing, right? We had this gold. It's interesting because the trickery started way back in the days of the goldsmith, where they figured a little system of, you got all these people that are putting their gold in your safe, right? And you're giving them these notes that have the equivalent value of the gold in this safe, right? They come and they present this note, and they can get in return a certain amount of gold, right? And then they could, since these notes have a value based on the gold that's backing it, people can actually trade these notes, right? If I have a note, even though it's a piece of worthless paper, but based on what's written on that paper, you can go to a goldsmith and actually get actual gold, then that paper gets value from the actual gold that's in the safe. So therefore, I can now I can pay for things using this paper, right? I can give you this paper, because if I give you the paper, you can also take that paper and go and translate it or exchange it for this valuable gold, right? But that was I don't know if this is the correct term, but I guess 100% reserve, I guess, because at that time, if you were to add up the total value of all the outstanding notes, people have all these notes, right, that say how much gold you have. If you were to add up the value of all the outstanding notes and do a comparison, right, do like an audit comparison with physical gold in the safe versus all the notes. And this is in theory, because who knows what they were doing even way back in the beginning. They may have started this trickery before we were aware of it. But let's just assume they weren't doing the trickery in the beginning. The numbers would match. The value of all those notes would match what's in the safe. But then they started doing this reserve nonsense where they realized that most of the time people didn't take their gold out, right? So you had all this gold in the safe and people were running around trading notes, and hardly ever would anyone actually come in and make a withdrawal, right? So you could sort of play this trickery of, I only have 100 ounces of gold, but I'm going to go and give out 200 ounces of gold worth of loans, right? And that's way, way back. Now, today's system, we're still using that same kind of structure, right? So basically, we have a debt-based economy, which is at risk of people paying off all their debts. There's a thing called having a run on a bank, right? If everyone goes to the bank and tries to take their money out, someone's not going to get their money. Matter of fact, there's been more than a few times that I've gone to the bank and they haven't had enough money. And it's the weirdest thing. I go to the bank and to be told they don't have enough $100 bills. They don't have enough $20 bills. They don't have enough $1 bills. And it's the most bizarre thing. When I was younger, I always thought that these retail banks, it's the bank. They have all this money, and they don't. How can I, as an individual, exceed what these banks have in their safes? That's pretty bad. I'm not a Warren Buffett by any means, right? There's no way that I should ever go to a bank and be told we don't have enough. You've got to order it. Like, this is what they tell you. You have to order it. It's the most ridiculous thing ever. So the reality is we have this debt-based economy and there's other factors involved. But the point is, this system is not really, in my opinion, it's not the most ideal system, and it does have kind of almost like a, for lack of a better word, Ponzi scheme sort of sound to it. And it's crazy to think, like, we look at Ponzi schemes and things like that, and it's crazy to think that our very economy itself is itself a scheme. And as a result of that, I believe a lot of the crazy stuff we see with the crashes and all that kind of stuff is, in my opinion, a lot of that is based on the realities of the smoke and mirrors that we have, that we call the U.S. economy. And not just the U.S. economy, of course, the global economy, which is a lot driven by the U.S. economy, right? CKKO says, are crashes a part of natural economic cycle? I believe so. I am by no means an economist, but I speak based on my personal observations over time. I've been around for quite some time. As you can see, I am no longer a young buck. So I've picked up a few things as I've gotten older. I've started to sort of realize, like, I remember when I first started my adult life and, you know, initially getting out there and starting my career, the economy was booming at the time. But as a young 20s guy, that's all I knew. Previous to that, my parents were paying for everything, right? So all I knew was this boom and jobs everywhere and everything looking great. So I didn't really plan for the downtime. And when the downtime came, it's like, whoa, what's this all about? But it took a few of those before I got the picture, right? You just kind of, in terms of how the economy works, I was kind of floating around and being very reactionary. You know, the downtimes happen. Oh man, this is horrible, right? And then it recovers. Oh great, we're back again. Then another crash. Oh man, this is horrible. But now I'm at the point where I realize, wait a minute, this is the pattern. This is the trend. This is how it works. It goes up, it goes down, it goes up, it goes down. So that means the longer it goes up, the closer we are to it going down. It's not rocket science. This is not some genius thing that I figured out. This is just the cycle of life, the cycle of the markets and the economy. So Stock Rider is in the house. Stock Rider says this is great content, just like Frosted Flakes. He didn't say Frosted Flakes. I put that in there. But he did say this is great content. Thank you, Stock Trader. Appreciate it. These are the kind of things that I've been thinking about recently. And I've been strategizing and preparing myself for the next crash. I haven't fully formulated my plans yet about what I'm going to do. I am looking to do some real estate investments for sure. I will try to share some of that with you guys. Again, I don't have a crystal ball. I can be wrong for sure, right? I'm not wrong about a crash. A crash is coming, but when is it coming? I'm looking initially at 3 years. Again, I'm not saying a crash is coming in 3 years. I'm just saying that I am focused on the next 3 years in terms of somewhere around there might be where the crash will come, right? But I will need more time to assess the data and come up with a plan or prediction or extrapolation about what I think is coming next. But ultimately, whatever I come up with is going to be a speculation on my point that I'm going to base on previous trends. I'm going to base on my thoughts about what's happening. We have elections going on. You know, is Trump going to be back in? Somebody else coming in? We have global issues going on as far as tensions with other countries. And, you know, there's a lot of factors, right? Look at technology. Look at General Motors, right? General Motors right now doing massive layoffs. Their stock price actually went up as a result. What's coming next? So that was the initial response. Is it going to dip down? Did it dip down already? I'm not watching GM like that. Maybe it already dipped back down. That's what I'm expecting. I expected that little rise that happened is a short-term thing, so it probably is going to dip down. But dip down back to where it was and then continue rising, or dip down to where it was and then fall. Don't know. But you've got to make an assessment of a lot of different factors, a lot of things, a lot of data to crunch and to think about. So once you make an assessment of looking at previous trends, what's happened in the past, right? What are the patterns that you've seen? And then you look at what's happening now and where things are headed based on what's happening now, right? Politically, technology-wise, business-wise, right? You got to look for the trends and try to sort of create your own forecast, and be careful of who you're listening to, right? You have a lot of people on online and like CNBC, and how do you know what these people are really about? Who's paying them to say what, right? You've got billionaires that have the money to pay off certain people to get on CNBC and say, hey, stock market crash is coming next year. You guys should buy gold. Come to find out, the person who's pushing that you should buy gold is being paid by someone who's vested in gold, right? So you have a billionaire who's selling gold, who pays off someone to get on CNBC and say a crash is coming in a year, and they can strategize and plan everything to where they plan to move the market, or paint the tape, as they say, right? Move the market in their direction. People start buying gold, buying gold, right? Which they profit from, right? And then they can change things up before you realize, wait a minute, they said a crash was coming in a year. It's been 2 years and there's no crash. Let me sell my gold. By that time, this billionaire already made some quick cash, right? From manipulating you. So be careful of these YouTuber experts and gurus, financial gurus, talking about you should do this and you should do that and go buy Bitcoin, right? These talking heads on CNBC, supposed experts, right? Every one of those guys that you see, you got to think about, who are these people and what do they have to gain by promoting whatever they're promoting? And they are promoting something, right? What are they connected with? Which companies are they connected with? How transparent are they being with you? Notice that when I recommended to you guys, I recommended Robinhood, right? And I told you straight up, not a lot of features, right? It's bare bones. The point is how cheap it is, right? They don't give you much, so they don't charge you much. So if you're looking for a low cost option, that's a good option. But at the same token, I also let you know about my relationship with Robinhood. I was very specific that I don't have any kind of endorsement deal or any kind of product placement deal. No deals at all. My involvement with them has nothing to do with me telling you guys to go check out their app, right? My involvement with them has to do with what we're building together, right? As far as capabilities, right? The capabilities that partially allows them to be able to provide you guys the services that they offer, right? So when I tell you that I, check them out, I'm not benefiting financially from that. They are, right? My financial benefit stops at the services that I provide to them, right? I benefit from the services I provide to them, and those services are in the architecture, construction. I don't mean construction in terms of like building a building. I'm talking digital construction, right? That's where the gains end for me. But when you see these people on CNBC, they're not talking about their interests. They just sit there and say, oh, you should do this, you should do that. Market crash is coming next year. You should buy Apple, right? Why are you telling me to buy Apple? Why are you taking time out of your day to go on CNBC to tell me to buy Apple? Are you gaining from saying this? If I buy Apple, is that helping you somehow? You got to consider this. So once again, you've got to fend for yourself. There's no crystal ball. There's no magic system. A lot of people are selling systems. Like I see people trying to post on my videos talking about, oh, I'm going to teach you this system of how you can gain consistent profits with your foreign exchange. Right? If they know a system where they consistently can gain all these profits, why are they telling you about it? Right? Be very, very careful. So rather than me telling you a system, I'm saying for sure in 3 years the market's going to crash. All I'm telling you, I'm giving you the tools, first of all, to make up your mind. I'm giving you the tools to be able to sort of, first of all, think for yourselves. Think about, wait a minute, the market's always going up and down. It's going up for a while. It's probably going to go down. And what is that going to mean for me, right? So you have plans. You want to buy a house. You want to buy a car. You have some vacation planned, right? But you're only basing that on what's happening now. So what I'm doing is I'm empowering you, if you're not doing it already, to look at the big picture. What's happening now is happening now, but what's happening now is not going to pay your bills tomorrow. Right? Because if you have a job right now and you're making a certain amount of money right now, and that amount of money is allowing you to live a certain lifestyle right now, that's not going to pay the bills in the future, because in the future that job may go away. In the future your salary may go down, right? In the future the unemployment may skyrocket. What does that mean for you in terms of your financial position with what you're doing right now? So I'm empowering you to be thinking about that so that you can plan adequately for something that we all know is coming, right? These gurus will tell you exactly when it's coming, right? And they'll give you a system, but that's how they make a living. I'm not making a living by selling you some kind of system or trying to get you to buy something, right? What I'm doing here is, once again, I was thinking about these things for myself. I was strategizing. I was planning. I was seeing the writing on the wall. And I said, you know what? I should share this with my audience. Right? Because I a lot of times get caught up, I'm in the industry, right? I work in finance. I'm behind the scenes. And I'm caught up on what I'm working on my projects and my goals, right? And yeah, I do the tutorials and things like that, but I have a unique perspective being on the inside, and it would be good if I would share some of those perspectives with you guys. Like, I really screwed the pooch with digital currencies, right? Because that's something that I was directly involved in, right? I was directly involved in some of the pioneering efforts of digital currency, right? Directly involved with exchanges that you guys weren't even aware of, right? And I was so caught up in my day-to-day paying the bills, right, that I neglected to share any perspectives with you guys. And in fact, I didn't even invest myself, which is crazy. I'm on the inside. I'm in this industry, right? I'm seeing what's going on. And everyone else is all, oh, digital, Bitcoin. Everybody wants to get into this, right? And I'm hearing it. I'm hearing, random people talking about it. I'm seeing it on the web or whatever. And meanwhile, yeah, I'm making a lot of money, but not as an investor. Not like I wasn't buying cryptocurrencies. I was profiting from the systems that enable the world, all these people that were out there buying and all that stuff that was happening. Part of what enabled that to happen, that's how I was profiting. As you guys know, my profit comes from the services, right? Not from the actual like investing in the market and things like that. It's from the actual services, right? So I didn't even invest myself. I didn't even share any perspectives with you guys, and I apologize. I mean, I was very busy, but I'm going to try to share more of my thoughts on things like that in the future. And that's what I'm doing right now. So anyway, this video was supposed to be a really short video, and it ended up being super long. But hopefully this was beneficial to you guys. Thank you for joining in, Stock Rider. See you. Are you look at the yield curve? It is said to be the most accurate indicator of a recession. That is an interesting comment to make, and I'm going to not give you more speculation, but rather I'm going to actually give you a real crystal ball. The crystal ball into my channel. So a couple of things that are around the corner that I'm working on. I am embarking on a new and very exciting journey. First of all, the trading system project is ongoing. So as some of you know, I'm building my own trading system, and that's been an exciting journey, and that is continuing. But that is now competing with another project, a new project, which is I'm now embarking on the exciting journey that is machine learning. So you have artificial intelligence, you have machine learning, and you have deep learning. Right now, my initial focus is on image recognition, but that is really just as I don't want to call it a test case, but sort of getting my feet wet. Once I master the concepts and the algorithms, then I'm going to apply it more directly to things that are relevant to what I do. So that's going to enhance, my position in investment banking. So that's an exciting thing, and I'm really, really excited about that. So the FIX protocol was, my previous, I guess what the term is, ace in the hole or whatever. That was my area of expertise or specialty, and I definitely made a lot of money with that. I was very much in demand during the boom years, but those days are long gone. And right now, I'm exploring the potential that machine learning will be the next boom for me. But we shall see. And it's not just machine learning in general, but it's connecting the dots, right? So you have this vast level of knowledge that I've attained over the years from a business perspective and from the fintech perspective, and then you add into it, infuse it with this machine learning, which is next generation and has so much potential, so much power, and then the end result, wow. So I'm really excited about that. But so machine learning content is coming. So we took a survey. So you guys want more database stuff. So database stuff is coming, but more specifically to the comment made by CU. I am going to be doing a series on foreign exchange. I want to continue the what we've done in the past, and in that sort of light, I am going to be covering some additional topics, which include yield. Yield is a fundamental and very important concept when it comes to foreign exchange. So I will be covering that and many other topics with foreign exchange very soon. And I got to get moving with that very quickly, because right now there's some major things that are happening right now that are very quickly happening. So I am basically I would say I am essentially starting a new journey, right? So like I said, like I mentioned before, I'm making some changes in terms of my focus and my specialty, but in addition to that, there is a massive deal that is currently about to happen. I have not yet made any agreements with anyone. I have not finalized anything, but it's things are looking very good, and I'm more likely gonna probably have something positive pretty soon. So that ties directly into the foreign exchange work. So that's a perfect sort of kill two birds with one stone type of scenario. So long story short, I am going to be moving very fast and aggressively to sort of muscle through a series for you guys. So database, I'm not talking to you, Siri. I'm not talking to you. Siri thought I was talking to her. Anyway, so I'll be pushing through with foreign exchange, machine learning, database as well. And then I will have some time off coming up pretty soon. And so that will allow me more time to do more videos and more content before I sort of get back into things again. Yeah, got a lot of stuff going on right now. Anyway, let me get going. This has been longer than it should be, and I actually have, wow, it's actually almost 11 o'clock, and I have some work that I need to get done still. Yeah, the story of my life. There's just not enough hours in a day, and always my plate is always full, always full. That's why I'm hardly on YouTube. I don't even watch a lot of videos, and you guys have seen that over the years. I've just not really been posting a lot of videos because I just really don't have the time, but I do have some time coming up, so I will be doing a lot of content for you guys. CU says, yeah, I'm getting into Python myself. Pandas is said to be doing well, may benefit you as well. Yeah, I'll actually be doing some stuff with Pandas as well. So Scikit, Pandas, also CV2. I don't know if you are familiar with that. So yeah, I got a lot of stuff to cover. And it's exciting. I love learning, and just constantly growing, and I encourage you guys to do the same. People look at the benefits that I've had, the rewards that I've had, the life that I've lived, the opportunities that I've been afforded, and that's not because I'm lucky, that's not because I knew anyone. That's the hard work that I've put in for a long time, and the constant growth, the never getting settled, and I've figured everything out, and I got something good going, and I'm just gonna continue doing more of this works, so let me just do more of this. No, man, that's not how it works. I mean, if you don't care to be in control of your life, if you want to be more reactionary and things happening and then you're like, oh no, then fine. Yeah, just relax, right? You got something that's working for you, keep on doing that, right? Just be tunnel vision. Focus on whatever you're doing that's working, right? So that when that thing falls apart, then all of a sudden now you're opening up your eyes and looking around, and then you realize, oh man, what's been happening? Where have I been? And by that time, it's too late, right? Constantly stay on your toes, constantly be aware of what's going on around you, and be thinking ahead, planning ahead, strategizing, growing, learning more, moving forward, constantly moving forward, always. That's how you should always think about your life. Thank you guys for joining in. Everyone have a great night. Be safe, be well, stay on your grind, keep pushing, keep growing, keep learning, but always don't get trapped in the moment, right? The moment is always going to be just the moment, right? But it's what's around the corner that you need to be focused on, right? Because many times by the time that what's around the corner arrives, it's too late, right? Don't get caught without a seat. Musical chairs. Don't be caught without a seat. Musical chairs. Life. Right? Plan ahead, look ahead, make sure every one of you secures your seats before the music stops. And it will. All right, guys. Dobre noche. Buenas noches. Wie geht's? Salut. Bonjour. Keep pushing, keep succeeding, keep strategizing, keep growing, stay focused, be disciplined.